What is the Forex market? The Forex market is the largest and most liquid market in the world. According to the Bank of International Settlements, there are $6.6 trillion of trading activity every single day in Forex. This includes spot transactions, foreign exchange swaps, currency swaps, and even options. You see, Forex is a global decentralized market or an over-the-counter market for trading currencies. You see, when I was first introduced to the Forex market, or FX for short, back in 2008, I had never heard of it before. And little did I know that the Forex market would be the financial market that changed my life and career path forevermore. Forex is a decentralized market that is made up of international dealers, brokers, and other institutions where money is traded. Now, businesses even use Forex when buying and selling products. And this goes from country to country. So as an example, I've actually been checking out the series on Netflix called Formula One Drive to Survive. And I was actually surprised to see that there's a US team involved in Formula One. Now, if that US team is buying its engine parts from, let's say, England, those parts are shipped from the UK to the US, and the dollars to pay for those parts are converted and settled into the UK's currency, or the Great British Pound. And this type of transaction is using Forex. This is obviously a real-world commerce-focused example. Now, there's an entirely different section of Forex that's devoted to speculative trading. Traders will buy currencies that they believe will increase in value, and they will sell currencies they believe that will decrease in value. Now, this involves interest rates, monetary policy, and other geopolitical factors like politics, tariffs, imports and exports. These all heavily influence the Forex market. The Forex market determines the FX rates for every currency, and there are a lot of them. My Forex trading day consists of trading Forex pairs of one currency versus another. Now, for example, let's use the most popular currency pair, that is the euro dollar. Now, this is commonly traded, and it's made up of the euro from the European Union and the US dollar in the United States. Now, let's say that the spot price is 1.2000. Now, if you have a US-based account, that means that for every 1 euro, that is $1.20 in US dollars. Or in other words, the euro is technically a stronger base price as far as the exchange rate goes. Now, if the euro dollar is trading at 1.000, that's called parity, where the two currencies are equal. So next, who are all these participants for this massive market, for this huge liquid market? Who are all the participants in the Forex market? I'm talking about large international banks, institutional banks, financial centers around the world that are open 24/7. Now, technically for Forex traders, it's a 24-hour market and 5.5 days a week. Now, that's a lot of broker hours. Now, we have dealer firms, banks, interbank markets that may involve even insurance companies and some of the largest investment institutions in the world. Okay, I'm talking about JP Morgan Chase, UBS, Deutsche Bank, Citigroup, and many other big players. Let's go back to that euro dollar at 1.20. Now, let's say that the euro dollar in 3 months' time is now trading at 1.25. Now, to you and me, that's only a 5-cent increase. But for the exchange and for the Forex market and to a Forex trader, that's a 500 percentage point move, or that is 500 pips of opportunity. And in those opportunities, all of those pips, all those percentage points, we can make money. So traders use different trade sizes and different denominations like micro lots, mini lots, even standard lots. These are all contract sizes through FX brokers. And if you traded the euro dollar from 1.20 to 1.25, that's 500 pips. Now, with a micro lot, that's worth $50. With a mini lot, that's worth $500. And with a standard lot, that's worth $5,000. Another big perk to Forex is it has fairly low margin requirements. Now, this is very different compared to other fixed income markets like trading stocks, ETFs, and options. And Forex also allows leverage. Now, this will enhance the profit and the loss relative to account size. But let's talk about leverage for a second. Now, as an example, certain parts of the world offer 20-to-1 leverage, others 50-to-1, others even more. We have 100-to-1, 200-to-1, even 400-to-1 leverage. So does the Forex market produce things that you've never seen in other markets? No. I mean, the Forex market, we have ranges, we have trends, right? We have breakouts, we have high volatility, we have low volatility. Just depends. The market's going to move up, down, or sideways. And if you'd like to trade with me, if you'd like to trade live with me, I even run a trading room where I map out the markets each and every week, and I look to find the best possible setups. And that's it. Thank you for watching this installment of the Pulver Report. See it, protect it, and collect it out there. And until next time, take care.